Welcome to the Atomic Level, the show where we decode the matters of wealth one insightful conversation at a time. And then we also, every week on Wednesdays, do what we call the office hours Matt Chats, or the AMA, Ask Matt Anything, about succession planning, estate planning, legacy planning, asset protection trusts, and those kind of things. So we are here with Matt Miley. Welcome back, sir.
Thank you. It's good to be here.
Awesome. Last week, we covered a lot of ground related to the small business wealth that a lot of families have. And that was built maybe over decades. And that has all the benefits of being kind of self-made and a major family asset, yet all the complications as well of oftentimes maybe not being structured in a professional way, maybe not being succession ready, even if that is just as a hedge against incapacitation or people dying in the wrong order, like you say. So we spent a lot of time going through audience questions on that last week, and we certainly did not get to them all. So today we're going to pick up where we left off, and we're really going to be talking primarily around the questions and practices that people should be thinking about if the majority of their net worth is tied up in a closely held business or small business, and it is relatively illiquid, meaning, unless they sell it or whatever, they have the cash flows, but there's not a lot of ways to tap into that liquidity, and certainly maybe even taking on debt is not available or not something that's enticing to them. And so how do they plan for retirement, succession, inheritance planning, siblings, children, all those kind of things, third-party exits? So we got into that last week. We want to pick that up this week because the questions were voluminous. And we're really talking this week about founder dependence, and whether a business can survive, and the leaving of that founder, whoever they may be. So, as always, we're going to do the disclaimers first. Matt is an attorney. He is not yet your attorney and may never be your attorney, but he is happy to tell you what he thinks about those things as long as you don't construe them as official legal advice, because unless you are formally engaged or retained by him or with him, then he can't give you legal advice, and I can't give you financial advice for the same reason. So this is educational. This is informative. This is real world stuff. I'm talking about some of my own questions and planning in candor with Matt, and we just make those available to you. So bring your questions. We'll get to the ones you sent us. Matt, anything else on the disclaimer before we get started?
No, I think you did a really good job on the disclaimer this week, Chris. I appreciate that.
I'm getting each week I get a little better at the disclaiming.
Well, yeah, I just, Rich, we're talking about exit planning. That's not really a lot of legal advice to begin with. So I appreciate that being there. And I did want to mention that, based on our last Math Chats discussion where we were talking about it's real important to know, what you're going to do. How are you going to retire? What's that 30 years of your life after you sell your business or walk out of your business? What are the things you're going to do? So I started compiling my own list just to get an idea, see how difficult it is, try to figure out what are those things in my business that if I didn't show up next week that I'd miss, and a lot of them turned out to be the relationships and, making some of uh, the decisions, even having someone to talk to and bounce ideas off of were all things that, it's like, wow, if I'm just at home, I'd miss this. So I started coming up with my own list of, things I don't like to do, things I hate, things I really want to do. I always chuckle because one of the things that I hate is throwing stuff away. So I don't throw things away much. That's why I don't think I'm a hoarder, but you never know. But one of the things that I'd like to do to replace some of the things when I wasn't at work, keep me going, was travel to Italy again. And in honor of that, I went and found the closest picture I could that looks like Italy, and I set up my camera in front of it today. So that's why we're
There you go. You're in the villa. You're in the garden villa today. Yeah.
trying to not only preach it, but also try to live it and do some things. But real interesting coming up with a retirement wish list, my retirement passions, what and the things that I would really miss uh, if I wasn't at work, and some of the things that I'd really be happy that I was missing at work as well. So real instructive trying to come up with that list, Chris, trying to get some ideas of what I would need to walk away and therefore, I think it's never too early to start thinking about that. And and that goes hand in hand with one of the things you said last week as well was you really need to get a value for your business so you kind of know where you're starting, the starting point is you're at.
Yeah, I think, for summary, and you guys can, if you haven't seen it, you can check out the article as well as the replay on that one, on the Substack. It was published last week, so it's fresh. It's in the top 4 or 5 out there. And what we really were talking about is, kind of valuation is a key thing. Just as a summary, it's one of the key pillars to really understand and align people on, because there could be the market's valuation of your business, like a third party looking at it as whether or not it's a going concern, or whether it's not, or it has something that could be sold for parts, right? So there's like the book value, the asset value, there's the going concern value, then there's the perceived value, and that can change depending on the family member, because um, the owner operator who's been in charge kind of has one sense of it, and they've seen the good and the bad, right? They've seen the assets and the liabilities. And in a lot of times they know the assets and liabilities solely to themselves, maybe except for their accountant, maybe except for their lawyer, and even the lawyer and the accountant may have different views of that, right? And so the reality is a lot of times in these closely held businesses, ours included, mine, yours, whatever, the single source of truth doesn't exist. And so getting some established understanding of what that is, and then learning how to communicate that in advance of any incapacity is good preparation. And it also is a de-stressor. It also, I think, is important to hit on the other thing, which is one of the takeaways that you did last week. It sounds like, as we talked about, well, what is my end game going to look like here? Because, when we've built this thing for 10, 20, 30 years, whatever it is, there's a lot of our identity tied up into it. And that's a good thing. It's given us meaning. It's given those things. And we might be tired of doing it. We might be ready to sell the business if we could. We might be ready to just wind it down if we could. We certainly don't want to wind down the financial benefit of it with a loss. We don't want to just watch it go to zero, because, again, we'd like to get whatever we can for it. But it may be where we're done. Like, we're tired of it. We've been there, done that. And we're just trying to figure out what the refirement is going to look like. What's going to get us alive again? Where are we going to get meaning now? But we haven't had the time, or hadn't sat down and asked us those questions. And so, as an owner operator, it's also important to figure out, well, what is it that I want? Then it's very important to understand, what does the kids want? Do they just want the money? Do they want time back? What do they want? Do they want to run it? Do they have a vision for it to put their own little stamp on it? And are they different? And then how are we going to deal with fair and equal? So these were some of the things we talked at length about last week. I don't want to rehash them here, but I want to cover down on some of the questions that we're getting this week came from those answers and those dialogues last week. So I also did some reflecting. I also put some things into work. So I'm going to share some of my own personal insights on where I'm vacant, or where I'm working on drinking the Kool-Aid myself, right? The cobbler's kids has no shoes, as they like to say. So, all right, a business, as we talked about, we exposed the problem. So a business can produce income. It can fund a lifestyle. It can employ people, not only family members, right? Local people. And yet it can also still possess very little transferable value. And that's kind of the unique conundrum, right? Is that it can do all those other things, but it can be very founder dependent, very owner operator dependent, which means it doesn't have any transferable value unless it's professionalized. And there's a lot of different ways you could professionalize it, but that's basically, I think, stress test number one is, how professionalized is this thing? Is this economic value driver? Is it someone who owns a job, or is it an actual business, a system of operations that is guided by the person who owns the control? And today, what we want to do is give owners, and other practical questions, kind of layers of the solution, so that when you walk away from this, hopefully have a better understanding. Well, what would happen if you disappeared tomorrow? So if you're the founder, or if you are married to the founder, or the son or daughter of a founder, right? What would happen if the founder disappeared tomorrow? Like, does it go away? Does it stay? How long does it stay? How do you measure owner dependence? Like, what's the quantifiable way that you can measure it and kind of score yourself? What documents, authority, access, and liquidity do you need? What must exist and to make that value transferable? How to begin determining what the business is actually worth. We talked a lot about that last week, so maybe we'll spend less time on that this week. But how to involve the family without creating panic or entitlement? Those are some other philosophical questions, some style point questions. What actions should you complete over the next 90 days if you're just trying to tackle this like in sustainable chunks? What are kind of the priorities to go after? And Matt's going to do his best to give us a direct answer, but also, again, just speak from the heart in his own experience. He's seen a lot of clients. He's done it himself. So, all right, where do we start when we want to figure out how dependent the business is on the owner operator? Like, what's a set of questions or stress tests that you might apply if you're trying to figure out if the owner disappeared tomorrow, what would break first?
Yeah, well, I think you said it in setting up that the question, about the transferability. I think the transferability of the business is key. The big question is your business transferable? And there's a lot of things that go into that. It's how it's run, it's your customers, it's all the things that go into the business. But is it transferable? Um, and what parts of that are transferable? For example, for the owner, is the owner's talents transferable? In my business, to have a law office, you have to be an attorney. So right there, you can't really sell it to a non-attorney without, having some attorney set up. And as at least an owner, I know some accountants and things are the same. So is that really transferable? Or maybe it is transferable, but it's to a certain subset of people. So you need to start assessing and figuring out, what's transferable, what's not. Are your customer relationships transferable? I mean, do you have your few big clients or your customers, or have you taken the time to have a customer contract that they're sticking with you for a period of time, a year or two, that you could transfer to someone else and guarantee that buyer that those big clients or customers are going to go with you. Are your processes transferable? You called that, I think, you professionalizing the business, but that's getting the processes and the technology and all of it. Is that transferable? Can someone else learn those processes? Can they do them, or are all those processes just in your head, the owner's head? If they're just in your head and you're gone, your business basically has to start over. Everything that you expect in your business, all the repeatable actions that you do with your business that make you money, they go with you when you leave. So you have to get those out and get those into someone else where they can learn them and run those for you. And then, what's your business culture? What's the people there? I mean, if someone buys you, are you going to actually raise that new buyer's culture because your culture is so great, everyone likes being there and things like that? Uh, and all those things in your business, you're not going to know if they're transferable unless you look at it. I remember when I first started thinking about this, I went and looked at my books, and I was trying to figure out how profitable was I in this kind of thing. Well, the way I kept my books was kind of novel. I'm kind of a, inventor at heart, so that's kind of how I approach the books. But when I looked at it, cost of goods sold, which is a byproduct of when you make something, what are the costs that go into that? Well, I was paying everybody based on the number of wills or truck. I was paying everyone a percentage. And so since they got paid when we sold the trust, I uh, put them all in cost of goods sold. Well, almost my entire professional staff was now as a cost of goods sold instead of under wages, where most accountants and most business brokers expect them to be. And the reason why that matters is if you think of a balance sheet or a profit and loss sheet, you're going to have gross profit, and gross profit is based on, your net revenue minus your cost of goods sold. Well, my cost of goods sold are inflated compared to the rest of the industry just because of the way I looked at them. So just from that standpoint, my gross profit would have been so much lower than all my comparables that my business wasn't really transferable just because it didn't look like it was transferable. So I had to go in and fix that. And then when I was fixing those, it's the same kind of thing. Is as an owner, there's a lot of things that you run through your business, a lot of expenses that you can run through your business and things like that. But all those expenses, which again take from that gross revenue to your net profit, your net income, those expenses, if they're inflated, your net income is going to be a lot lower than the other firms that a buyer could purchase. So again, you're not going to look very favorable or attractable to a buyer. So then when you go into there, we had to look at, well, which one of these are things that a buyer wouldn't have to spend? What are the, like my kids' salaries and things like that. Well, they weren't going to be there, so I could take those off. So all of a sudden, my revenue is going up because I'm learning and looking at the business to decide, okay, well, they wouldn't have to pay for this. They wouldn't have to pay for this because these are things that the business pays for me, but an owner wouldn't have to pay that because I'm out of the business. And all of a sudden, you start getting a little more income. You start looking a little more attractive just on the sheets. So that's the big things, just like you said, Chris. You got to get out. You got to assess what you're doing. You kind of got to look at what other people are doing, and just figure out, is this business even transferable over time?
Yeah, and I think one of the things there, as you look at that, is assume that your goal is to make it transferable because you could have another goal, right? The other goal could be, and you mentioned this, whether I'm a professional, a dentist, a doctor, a lawyer, something like that. Typically, I can't just sell my business to a non-dentist, doctor, lawyer, or accountant. Like the person buying it usually has to be that. If I'm an RIA or if I'm a broker dealer, I typically can sell my book, as it were, assuming it was transferable to another broker dealer or RIA, someone with the licenses. Um, that all being said, I also may look at it like, hey, nobody I want is going to work in it, meaning my son-in-law or my daughter-in-law or whatever is not going to be the next generation dentist, doctor, lawyer, accountant. So, do I really care if the practice exists beyond my being there? Do I own the real estate? If I do, does another dentist want the location because it's right on Fifth and Main, right? And do I just kind of own that? There's all those questions we spoke a little bit about last week, but this is where you start to think about what is transferable, what is not transferable, what is transferable. And then the other thing is, what is the free cash flows? What are those things? And if I've been doing this for 25, 30 years, whether I knew it or not, was my default always to kind of take my real economy business and take the profits off of that and invest them in the quote unquote financial economy? And have I done well enough over there to just wind this thing down and play golf and invest? Is that the transition? And then if I do that, is that a new identity I could try on and become a persona of, where I'm now managing my wealth as a full-time job versus managing my business operation as a full-time job or delivering services? These are the questions only you can answer. When you start to look at it and you have some sense of it, and we're going to make the assumption that they want to make it transferable, the business itself, one of the fastest ways to get your teeth around or your head around that is to just get it SBA qualified, because you're going to have to go through the practice of normalizing your P&L to your industry, right? And so if your cogs are where they shouldn't be and your SG&A is light because you've got it dealt with somewhere else, well, then you'll find that out and you'll professionalize it because you'll have to package it up for someone else to make sense of. And you'll see a thing that's not seen often in the larger transactions. So even in the lower middle market, most of those companies are bought on EBITDA or some kind of multiple to revenue and EBITDA. When you think about small and closely held businesses, you see a thing that shows up a lot of times called SDE, which is seller discretionary earnings. And that number is kind of like weird if you're used to looking at EBITDA as a purchaser. Like if you're buying and you're going, what's the free cash flows? What's the EBITDA? What's the CapEx? Like those are what you look at when you're in like the lower middle market buying something maybe larger, a couple hundred million or $1 billion matter. But if you're buying like a $10-20 million business, you might see something called SDE, or a $5 million business, you might see something called SDE. And that's that number that is essentially the discretionary number that's being spent right now. But if it wasn't being spent on the kids' salaries or the tuition or the boat payment or whatever that you take clients out on or whatever, right? What would that be? And so if you recast that back in, okay, so this business has X amount of profit, but it also has $400,000 worth of SDE, which means you, the new owner, could take that 400,000 and save it, eat it, spend it, but it's yours to decide, because right now that money has been spent on the current owner's well wishes and strategies and tax things, right? And
Exactly.
SDE is like kind of one of these slippery numbers because it's not really the thing that you get a multiplier on. Some people multiply the value of the business off of that, some don't. But it is a number you have to get to. You have to assume that you no longer are there. So you're no longer directing the discretionary revenue income that's not dealt with. And some new owner will look at that and decide whether or not that means they hire an operations person or they, you know, take a CapEx strategy that's a different direction or whatever they do. So
Mhm.
getting to some level of understanding your SDE, if you've never done that, is a good practice. You don't have to sell your business just because it's SBA qualified. But if you do that, you've at least gone through a simple programmatic way to kind of get it to a place where it's transferable in someone else's mind.
Right, yeah, and one of the things I saw when we were doing it was, there was a lot of, coaching that I chose to get, which was a discretionary expense, some coaching because, again, I like bouncing ideas off of people and things like that, and I think, I always wanna be better, lifetime learner, all those kind of things, but the amount of coaching that I was, purchasing would not have to be done by a new owner, sustainable, especially, that had a couple CEOs and things around that knew some of the things that, I didn't know from, just not being a person who ran a big company. I just run my own company. And, it's a legitimate business expense, but you're running through the business because at the end of the day, that net income is what you pay taxes upon. And that,
Right.
and if you're just if you're just spending what you made, that's zero. And that's kind of what people get incentivized to do is pay maybe the least of taxes, but it doesn't make your business again look very attractive because hey, you're making zero at the end of the day. That's your net income, and I got a multiple that I want to multiply your net income by, but zero times any number is zero, so you're not worth anything. And that's the whole deal is to try to figure out, okay, well, what's the personal expenses or could be thought of more as discretionary expenses is a better word compared to the things that are necessary to drive a business and those kind of things.
I think it's the
Like, marketing too. Marketing could be you can spend you spend everything on marketing if you want. There's always ways to market. It just is it being smart? Is it in there? And that's why you try to look for these numbers like you're talking about, these multipliers out in the industries to find out what other people who are similarly situated in the same industry you are, how are they spending their thing? What are they doing? And that's just the first assessment again, just to see, am I in line with everyone else so that I would even be attractive to the buyer?
well, and also when you think about succession, I mean, the conflict here a lot of times is not because the business wasn't structured to be valuable. It was because it wasn't structured to transfer that value. It was structured to deliver a lifestyle value that could not be delivered through earning that same monetary equivalent in a different vehicle. For instance, if I make $1 million a year as a W 2, which very few people do, but if I made $1 million a year as a W 2, depending on what state I live in, I'm really only taking home close to $500,000, right? Because the Fed's gonna get their piece right off the top. My state, depending on where I live, unless I live in Wyoming or California, Nevada, Nevada or Florida or one of those places, like, and I don't have tax, um, then I'm gonna have my federal and my state withholding. If I'm in California and New York, I'm gonna get hammered for making that kind of income. So by the time I see it, I'm working 6 months of the year for free. Now, take that same person and they run $1 million of, call it EBITDA, earnings before interest, taxes, depreciation, and those kind of amortization. Well, they might be able to bleed out through coaching, through marketing expert, through this seminar happened to be in the Cayman Islands, where that coach was delivering their workshop, and I'd always wanted to go there, and so I'm going to go there for 4 days and do this workshop. But I got to fly in a day early, I got to leave a day early. I might as well bring my wife. In other words, like, now that tax write-off of 20, 30 grand would have cost you 40 grand if you tried to pay for a vacation and you wouldn't have gone, right? And so the point is, like, when you start to look at this business as someone else's asset, not your asset, even if that someone else is your children, then part of what you have to understand is, what am I transferring? Am I transferring the business asset and its value, or am I transferring the lifestyle that it funds? Because they could be two totally different things. Because one is designed around mitigating tax liability. The other one is about making it a going concern, right? And it may have tax advantages that way too, but the point is, you buy different stuff. right? You would do different CapEx expenditures if you were growing the business versus funding a lifestyle. You could get bonus depreciation for buying capital equipment or hardware or software or things that expand the business's capability, but they don't put your butt in the Cayman Islands for 3 days,
Right.
right? So the point being that you really have to understand what's the transition that you're making with this vehicle. Are you turning it from a lifestyle optimizer and profession into a business vehicle, or are you keeping it as a lifestyle optimizer and just handing the reins over to the next operator? That's a very different fork in the road, right?
That is, and I think it's even a combination of that, Chris, like we were talking about that, when I'm saying you need to develop what that retirement's going to look like, that's the lifestyle piece. That's the
Right.
piece that you're transferring because you're transferring the business assets, you're transferring the business process, you're transferring the business employees, hopefully the customers, even the IT thing that you're transferring the actual business value for making money. And, if you're making 15, 20%, growing by 15, 20% a year, other buyers are going to find that attractive. And that's what they're going to be coming after is to reproduce that. But the lifestyle, the reason that you may have got into the business to begin with, I'm still convinced that the word entrepreneur is a French word meaning unemployable. You're just going to be the person that you like working on your own. But that lifestyle that you end up funding, that lifestyle that you end up, it takes you on trips and things like that. That's what I'm saying. And that's what I'm working on. That's why I have the picture behind me. That's the thing that is going to go away, if you will, when you transfer the motor or the vehicle or the business that's creating that lifestyle. So you have to fund that and create that and keep that some other way. And that's why it's
And I think that's the point is you kind of you can start this a couple ways, but last week, what you said that I thought really resonated was you really kind of know what your number is, right? Like a lot of entrepreneurs, especially younger ones, we go, "Oh, what's your number? Oh, when I make 20 or when I make 50 or when I make." That's not what we're talking about. What we're talking about is like, what is it that at this point in your life for the next however many years, 10, 15, 20, that you can stay on this earth, hopefully in capacity with health, and you've worked this long to kind of get to this point. You've probably bought a bunch of stuff that you don't need to buy again, meaning you're probably not trying to go prove to yourself you can go buy another Rolls Royce or Ferrari at 65. Maybe you are. Maybe you've never had that one and that's on your list. There's no judgment here. It's like you should know. And then you got to go, do I really need to buy it? Right? Like my favorite car, one of my favorite cars, is a $415,000 Bentley Mulsanne. But guess what? They don't cost that anymore and they don't make them anymore. And you could buy an Arnage T or Mulsanne for the price of a, reasonably new BMW. So do I really need to buy it? And if I do need to buy it, is that where I want to put 60 grand? Okay, maybe it is, maybe it isn't. Do I lease something? Because I'm going to scratch that itch and after a year be tired of taking it to Costco and worrying about someone dinging it. And now I'm just going to go back to a Forerunner or something. Like, what do I really want is the question that is the harder one for people to ask. But it's really what drives it. Do I need to own a villa in Italy or do I just want to be able to go whenever I want? Because going whenever I want means I can rent somebody else's headache. And it's worth the premium because I'm doing it 1 week or one 1 month of the year versus worrying about it 12 months of the year. Right. And if I decide I like a new part of Italy or France, I don't have to like figure out, oh, no, I can't go because I own this thing over here. I got to make sure I get my money's worth. Like at this point, what are you unloading in your life? Obligations, overhead, and what do you want to maximize? That's the owner's question.
and then
And
even more than that, Chris, is you're actually asking what's the new definition of success for your
Mhm.
life? Because it's um, you're getting those in the business, but you're looking at the metrics of the business to do the success. Hey, we went up above what we did this time last year, or we're here. We got this many more clients, or we wrote this many more trusts this year than we did the year before. There's all these little measurements in that business about success that kind of keep you going. If you think about it, that's what drives you as an entrepreneur is to keep having success and keep showing up, have more success, bigger reach, all these things. Well, your retirement or after you sell the business, you're going to just have to measure those successes another way because you're not going to have that. And, that success may be, well, not only I'm going to be in Italy 2 months out of the year, I'm also going to learn Italian or something like that. But
Mhm.
you now have different measurements of success that you haven't ever had to do before to keep you going. And that's why, it's best to look at these things around this lifestyle, so you don't retire and die, because that's unfortunately we see it a lot.
And a lot of times people think they need more money than they do, and they also accept more money or less money than they should for a thing, right? So, in other words, when we think about selling a business, especially this kind, we go, it's binary, right? I either can sell it or I can't. It's transferable or it's not. And then I hope I get my price. Well, that's not really that's the starting point. That's not the truth as far as your option tree. Because let's say, and you mentioned it last week, let's say that your lifestyle requires $400,000 a year. And with $400,000 a year, regardless of where it comes from, with $400,000 a year coming in, you can live a life of minimal compromise for the rest of your days, doing whatever you prioritize. Let's just say that's the number for round numbers, because that's a healthy number. Um, well, if you kind of sell your business and now you get this lump sum, and the cash flow from that business between the discretionary spending and the take home and the distributions goes away because now it's not your asset anymore. It's your kid's asset. It's somebody other than you. And you got a lump sum, whatever that lump sum is. Well, if that's now in the financial markets and it's in relatively risk free returns, earning you 3%, and that 3% doesn't yield you $400,000 a year, well, then you're going to be dipping into principal to make up that gap. And you better have enough of the millions in there to lose 20 years of that gap before you're at zero, which is fine. Because again, if you die with zero, you lived well, right? You left nothing on the table and you live with minimal compromise. But it's very hard to time that right. you know? So the real question is, what is the number? And at whatever the current risk-free yields are in the market that I can get, is that going to be enough for my 400,000? Because if that's the case, then go get that number. And don't worry about if it's more or less, because that's what you said you needed to do all the things you could imagine doing. But if you can't get that number, what if you can find the 400,000 through an earnout? What if you can find the 400,000 through a combination of rental and whatever income? Well, then you don't have to sell the thing at all. You just transfer it and you stay on as chairman emeritus or whatever until you're gone, and you just negotiate some kind of distribution or check for staying involved, right? And in a mental capacity, but where you're out of the day to day, that's the same as getting X million dollars for it as far as the net yield.
Mhm.
Um, And so again, understanding what it is that you need to run your life, to plan for medical, to plan for, future things, and also enjoy Italy at the level that you want or whatever the thing is, that number is what matters. And if you can annualize that, then that kind of tells you the lump sum you need or the distribution you need to negotiate and gives you the optionality for someone to come along who may not have 5 million bucks or who may not want to take on an SBA loan, but who happily keep paying you a six-figure check for 4 years with a balloon at the end or something. So, anyway, we're just talking through the scenarios that people probably have thought about, but let's get into some more of the questions, because some that came in I thought were good. So, okay, who can access payroll, banking, accounting, tax, and insurance information? So right now, who does that in your business, and how involved are you in it? And then most importantly, as you think about professionalizing this, how and when, Matt, do they and what do you suggest as far as getting other people access to these core functions that, sometimes they feel a little scary to give up control over because you're still running the thing, and this is kind of like maybe not the thing you love to do, but what makes us feel safe as owner operators, right? Is only I can screw up the payroll, or only I know the payroll, or if I have to play a gimmick over here because cash flows are tight, like I know, and no one else has to worry. There's all those realities that happen. So how do you suggest people to attack that part?
Well, it's you just need access and someone to have access, and you can make it happen when certain events in your life happen. I mean, you don't have to give them carte blanche access right from the beginning. But a lot of those things are done through what we call power of attorney type of relationship, where the person given the power is called the principal, and the person accepting the power is the agent. And you can define those a lot of ways that you want. You can have a what we call a framing power of attorney, which only springs into event when you become incapacitated, which, can be asshole, but you can write what that means, how many doctors it takes, or, how many emails that you're answering, sending Walmart cards to, the Prince of Dubai or whatever. Well, what is the definition of incapacity? That's when your agent could come in and take over. Now, of course, those only last while you're alive. They don't help you when you passed away. They're they can be handy. You can make those specific powers of attorney where it's just for this bank account, or just for this business, or just for this piece of real estate. They don't have any of my other powers. I'm keeping all the rest of the
That was
powers.
this second part of the question. So keep talking about that. But the second part of this question I thought was good, which was how many do I need, whether it's powers of attorney or not? Because we're talking about passwords, 2FAs, digital systems, who can speak to the lender or the landlord or the vendors or the customers or my employees. If it's not all one person, because maybe I have my kind of number two, could be the spouse, could be whatever, where I'm going, look, if something was to happen to me and I was incapacitated, I want her or him to have the same access I do upon that moment. And I need them to have that now so that because I trust them the most, right? That's the implied thing is that even if they're not fully up to speed on all those pieces, I know that they'll make the best right decision and they need to have access to decide who else can have access. I at least trust that person. So you kind of have that main, probably point person in the hierarchy of the family tree. Then, as you're preparing for that, before you put that burden of administration on that successor, whether they're just a temporary one or not, how many powers of attorney do you think is normal for like a $5 million a year business, a $10 million business? Because now these things have multiple vendors, multiple. So what is somebody mentally prepared for? Like, is it 10? Is it five? Like, what do you?
Well, the uh, well-written power of attorney can give the agent access to what they need, and then you can have subsequent agents if that first agent cannot act. So, you can put 5 or 6 people on one power of attorney, just in that order that you want them to step in, just in the event that, if it's a spouse and you're traveling together and something happens to both of you, it's not, you haven't solved any problems there. But the other thing, the
Your buy-in though, like let's say you list somebody, but they didn't. I mean, how do you communicate that? Hey, Matt, I'm gonna list you as the power of attorney on my business, and I want you to be available for this, this, and that. I mean, technically, you still have to accept.
Yeah, yeah, and then depending on the stage you're in, that acceptance is different. Is it a signed document that accepts it, or is it just acting as if you were the agent, which some states allow you to start using the power that's deemed acceptance. Um, yeah, I mean, this all has to be planned out, and that's why they're always certified ethic planners and the attorneys, state planning authorities that are trying to figure this out with you, or you're talking to them. It could be, you got that confidential relationship with an attorney. There could be a lot of the passwords and whatnot you leave with that person, and they're only instructed to share those upon your demise or your incapacity, whatnot. The passwords. If someone has, if everything you have is, one password, medical password gets you into all your passwords, and someone has access to your phone, and all your two-way authentications is through that text. I mean, that person is going to be able to do a lot of your stuff, which is also scary if someone steals that phone. So, um, getting the authorization and the relationship, are like two different things. You really have talk to people, and you gotta, might start with your bookkeeper where you're going on a trip. It's a short trip, but you're just saying, "Hey, I'm going to be gone for out of the country for a couple days. Something should happen to me. Here's a document that I want you to take to the bank. So that you can get the last payroll done. And, refund the money to the clients or whatever." And then if you survive your trip, come back and expand that and start talking about relationship. Expand it. How did that land with that person? Were they willing to do it, or did you just scare them? And that kind of thing. So that again, it's talking, it's having those relationships, and it comes down to trust. And I think entrepreneur not only is it unemployable, the don't trust anyone else is probably what it means too. So it's tough to build those things together.
Well, that leads me, yeah, that leads to a segment on like, what is the business from a process standpoint? What does it own? What does it buy slash lease and benefit from when it comes to the systems? Because everybody talks about, oh, a business is a set of systems. Otherwise, it's just somebody owning a job and it's, like all that. But let's granularly look at that because we live in a world today where not just because of AI, but because the last 20, 30 years between SaaS and other things that essentially you have access to systems that are non-core but are necessary for your business to operate. So an example that I always lean on, and they're a brand partner I talk a lot about. You've heard me talk a lot about them, but as an example, like payroll, right? As a small business, if anybody has built a small business, they understand cash flow is usually the biggest kind of concern because depending on what industry you're in, you either have cycles, like where I live, and like where you live, there's seasons, right? And so if you live at the beach or you live in the mountains, there's times where it's busier than not. So if you own a retail business, you might make most of your money within 4 to 5 months of the year. But guess what? Those employees don't want to work for you just 4 to 5 months of the year. So you might have seasonal employees, but then you have your full-time staff. Well, you got to fund that payroll every 2 weeks, even in the slow months, right? Even when COVID happens, even when whatever, right? And so cash flow becomes kind of a constraint, and payroll is one of those things you just don't want to mess up because whoever state you're in, like they're going to get their money, right? And that liability doesn't go away. So then there's the compliance, then there's the workers' comp, then there's all those things, and none of these things are why you became a entrepreneur, right? So again, I pick on it because it's like one of those things I just absolutely hate. Healthcare benefits, like you got to be kidding me! Like who wants to deal with that as an owner operator? So then you have the tax strategies and the different things and where you want to hire people, where you want nexus, if you have remote employees, if you don't. So all these questions that are more present day relevant, where you might have a small business that operates with 3, 4 employees and none of them live near each other. That used to not be the case. That's more common today. You may have a law firm. You may have a financial advisory. They may have multiple satellite offices with principals, but they're in different states and you have clients in different states. How do you deal with payroll and nexus and those kind of things? And a lot of people may have a PEO. They may have what's a professional employment organization because you get better buying power on benefits. Most people are familiar with that, whether it's ADP, Paychecks, whatever. Some people do it themselves because they like that. Well, that works when you're just a little mom and pop. That is not transferable. And that's probably a big headache and waste of time and money, but it gives you that sense of control. Okay. But that's not transferable. And so I personally, like, I fell in love with a concept called EOR and a company called Pebble that does it. There's several out there that do it, but that's who I use because it helps me have all that compliance, all that. I don't have to worry about it. It's one single line item. I don't have to worry about people getting paid in their local currency, if they're foreign, if they're this or that. I just get a debit off my thing for one lump sum to cover all the payroll, 1099s, W-2s, whatever, and they get handled perfectly. And if there's a benefits question, my phone doesn't ring. They call the employer of record, which is Pebble. So it's the ability to outsource core things. And I say that as an example only because what else can you outsource? Like what other systems are purpose built to be perfect at things that you need to operate to be a professionally run organization that are efficient, that are compliant, that are fully in the letter of the law and all the different jurisdictions they may need to be, where that headache goes away. Yes, you're trusting, but you also have a larger company or somebody that's like a third party that you can audit, that you can blame, that takes that liability off your desk. So there's the benefit. And the question becomes, do I buy versus build it? And a lot of times in these small businesses, you have to figure out what is it that's core? Is it really what makes me different? No, it's not what makes me different. People don't buy from me because of who the employer of record is, right? And they don't buy from you because of who the employer of record is. They don't care if the person works for the Miley Law Office or if they work for XYZ Inc. They don't care. They just know that they're servicing the customer on behalf of Miley Law or Atomic or whoever it is. So again, if you guys are looking at things like that, you can check out highpebble.ai. they're not an AI company, they're an employer record company, an HR company, but they're doing specials for people on the podcast. You'll pay less than I pay. I'm happy with what I pay. Check them out if you want. That's my endorsement, not Matt's. But I say it because the topic here is, what can I outsource? So what other systems do I really need to do myself versus borrow or buy? And what are some other examples? Payroll would be one big headache. What's another one? I mean,
Well, yeah,
obviously,
there's a lot of payroll companies, and you probably shouldn't be doing your own payroll anyway if you're really, knocking it out of the park doing what you're good at. The owner should eventually just try to do the things that they enjoy and quit the things that they don't enjoy. Cleaning the building. Well, that
right,
could be
yeah,
out.
right, yeah,
Um, the thing is, though, I'd like to just, as I'm mentioning these things, is just remember that even if it's outsourced, if you don't have someone to step in when you're incapacitated or you pass away, you don't have someone to hit the right buttons to get the outsource to work. So you still need they're two separate things.
that's why I say that's glad you brought that up. So, in other words, if I'm putting together my chart of power of attorney things, right, and I say, "Hey, Matt, here's what I want you to do in my incapacity. I want you to handle payroll, and here's how I do it."
Yeah,
Versus,
these people know because we outsourcing it.
hey, here's what I want you to do, Matt. I want you to have power of attorney, and who does my payroll is this company called, in my case, in this company called PEP, right? And they're an AOR, and here's the number you call. You just call this number; they'll handle everything. That's a
Right.
different conversation for you to accept, because if I say power of attorney, you're gonna handle my 30 employees
Yeah.
versus here's a call. You now have the authority to call this person and they'll handle the 30 employees. It's a lot easier to say yes to the second thing,
Hmm.
right? Than it
And
is the
here's the
first.
book. Here's the booklet that tells you what to do, what to answer, what button to push
Right,
when you hear the pause, and then at the end you just hang up and give them a code or whatever. But
right,
here's the book. You don't have to know anything about payroll. You just have to call this person, push these buttons, say these words, and it'll happen. Which is why you want to outsource in the first place.
right. And guess what? When you stand up in the meeting after I've been incapacitated or after I'm gone, and you say to all those employees, Chris is no longer here, Matt is no longer here, and I've been given power of attorney and I'm going to be, and all of them start to panic from their own perspective or their grief or whatever it may be, and they start to ask you questions. You don't have to have the answers, because when they ask you questions, well, what's going to happen with our benefits? What's going to happen to that? You have the authority. You've already pushed the button. You've already made the call, and Pebble's sending someone out to answer all their questions, and there's support 24/7 that is not relying on you. That's a whole different thing than saying, here's how you're going to do it. And now you field all 30 people's questions about their vacation time, their benefits, their this, their that, and whether the check's still coming on Friday, right?
Hmm.
That is not the question anyone who is taking over the reins in a emergency or even as a successor wants to have to answer if they don't have to. Again, same thing with cleaning. Like, what about this? What about that? What about our supplies? What about this? Button push, button push, button push. So really, if you can design your business where everything you do that's core stays in-house, everything else is outsourced to a professional business who only exists to do that one thing. And then the power of attorney is, here's who has the button push with the backline phone numbers to the people who answer all the questions. Then that's a structure that's a little bit more palatable to whoever your next successor or
Yeah.
control person.
And put your buyer's hat on for a second too, as well. I mean, if you're a buyer, even if you're in the family buyer, you're the next the child who wants to take over. You're now looking at this business that has these systems, if you will, these processes, outsourcing, whatever. They're all systems. That when you sign up for them, you get an onboarding. They find out, how close they can do it, how you want to do it, and all these things. If you're a good company and things like that. But you got all these outsourced things. So now a buyer can say, well, when the owner leaves, we just have to do this to get the payroll out there. We just have to do this, get the place clean. We did, this guy's even thought I'd bring a window washer in once a month, to make sure we're not looking at dirt out there. This is how we write the trust, like in my business. This is the software we use for that, and here's all the codes and everything to make that happen. Here's the clauses that we use that are kind of proprietized, and how we do the trust at a higher level than other people. But all those systems are there that can now be figure in the cost of everything. Okay, so here's my revenue, and I know these these costs. I don't have to go pay someone to be my HR. I don't have to go pay someone to be my receptionist or anything like that because I know what they're paying. My uh, employees want to stay, and then all these other outsourcing are like a bunch of mini employees that want to stay and want to keep there. And now that buyer can look at that and say, okay, that I know what the costs are going to be, so I know what my profit's going to be pretty close to what's being represented. And then that buyer can even say, and not only that, I'm in a bigger organization myself where we do 3 or 4 of these things that they're outsourcing, which we can internally do, making our profit even higher because now we can take care of those things because we do
It
the,
it
we
also
leverage it.
Yeah, and as you say that, I think, again, put on your buyer's hat for a second, because the number one thing that I always love to simplify this down to is, would I buy this for myself? Like, that's a hard, honest question, but would I buy this firm for myself, and what would I wanna pay? And the answer is always, I wanna pay as little as possible, right, and get as much value, but the real answer is, would I buy this for myself? Because if you can convince yourself that you would buy it from yourself, then you have a market, then you have something that's transferable. Because you won't lie to yourself, there's no risk in that, like, you go, "Well, I'd love to buy say I'd buy it for this, but, the reality is, yeah, I don't think I could do that." And would I buy it for myself using SBA debt? Would I buy it for myself using a loan? Well, what interest rate? Okay, well, that means my debt burden's gonna be this. Would I buy it for myself? And you go, "Well, if the debt burden was that, like, it looks good on paper, but the reality is I know my business, like, I don't think I would feel comfortable carrying that kinda nut in debt, given some of the things I know happen in our business, even though we're doing well, because there might be months where that's a burden." And so you then look at the things where there's leaks that you could fix. But if you say, "Would I buy this for myself, and why?" Then you've probably looked at all the nooks and crannies that haven't been looked at in a while. And then if you think about it through the lens of your kids, even if your kids don't want the business, if you put it on, would my kids buy this from me? Would I let them? That's an even tougher question, because I don't care who you are. If you got parents, I don't care how good of a parent you are, or how bad of a parent you think you are. If you if you had to sell your business to your kid and they would take it on for everything it is and everything it isn't, that's the litmus test I would use, because I'd go, "Oh, right now, no. No, I wouldn't give it to my kid. I'm not giving them this headache. I'm willing to take this headache on for them, but I'm not willing to give it to them this way." That's how I've kind of approached it, just as a super practical litmus test of, like, how ready is it for someone else? Because
Mhm.
we'll often take pain that we wouldn't want someone else to have, um, and it's a good way to just be honest with yourself. So those are some practical questions I would say, would I give this to someone? Would I sell this to myself? Would I sell this to my kids?
And I like your term there, Chris, about the headaches and the pain. I think those are the ones that, as you're looking to transition your business or to even pass it down to your kids or to sell it, is you need to have a period of time where you're saying, what part of my job gives me a headache? What is the pain? I'm enduring something for someone else because that may give you an indication of what you need to outsource. If that is a specific enough part of your job that you don't like doing, there's probably somebody out there who would do that for you. There's a lot of hiring temporary services, there's offshore people, all these things, but there's people out there that would actually take some of those pain points away. And if you raised your kids and they're like why not get the things you don't like to do out of the business, get someone else handling those before you give it to your kids, or before you sell it. So I think, bringing this back almost full circle to where we're beginning, it's those things in your job that you like and their lifestyle, you're going to try to replicate those with your new your new retirement things. But the things that you hate and you don't like to do and you're not good at, and they're not really what you do, they're not really in your talent. Those are the things that you should start looking at outsourcing because those are going to more professionalize your business. It's going to make it easier to sell. And it's going to move that multiplier that we talked about, where you're multiplying the net income to find out how much your business is worth. It's going to make that multiplier go up and get bigger. And
Yeah. And you
That
see this last week, it's kind of funny. The exercise is starts out with one end game in mind, which might be, hey, I want to plan for exit, succession, whatever it may be, right? So that might be the motivator in the beginning. And then I always think of like those real estate shows, that are on in hotel rooms or whatever. Like whenever you're in a hotel room, you can watch Jurassic Park for the 88th time, or you can watch like HGTV do a flip. And so those shows where it's like they're gonna fix this house because this house just doesn't work anymore. It doesn't have enough bedrooms or it's too cluttered or we don't have whatever we don't have, right? It's not enough, but they live in it. So we're gonna spend some money. Somebody's gonna spend some money to fix it up and see if we can tolerate it. But then we're gonna find our other house. So then the other person is gonna go find us a house that actually is the one we want, right, in the area that we want, with all the right rooms, with all the right space. And now we're not gonna have clutter anymore because they're gonna just get us a new place that's better. And then when they do the remodel on the current one, half the time they don't move. And it's like, oh, because it's already home. What they realized is they were tolerating stuff for no other reason than they were tolerating it and they were used to it, but they didn't need a new house. They just needed to stop doing the stuff they hated. And in business, I think that's what a lot of people are going to find. Like you start doing this to succeed yourself, to plan for that exit, to sell it tomorrow, to whatever. But once you clean out some of the crap you hate, you might actually get the income you like, the time back that you wanted, and not have to sell it right away. And the
well,
thing
your
better.
job becomes fun again. Your job becomes enjoyable and fun again because now you're doing the things you want to do instead of the things that you have to do. I mean, it does not make you a better owner if you clean your own toilets. I mean, that's just graphic example. I mean, no one comes in and says, "Well, we picked you off the internet because we knew that you cleaned your own bathrooms." Um,
Right.
that it just things. But as you're trying to save money and you don't have anyone else to do it, that's what the owner does when you're starting out. You do everything. Well, as you're growing it, you can peel some of that stuff off, outsource it, systematize it, get an AI system or something to run it for you. But to get those things off your plate, and you're going to enjoy your work a lot more. And then when you're enjoying your work a lot more, when you go to sell it now, you can be a little more picky. It's not a fire sale. It's not waiting till the last minute. And you're now in a better position to, you mentioned, if we had 400,000 a year, that would be a base point of what we needed to live on. Well, you look at your investment you have now and are they going to deliver that? Well, probably not. So the gap in between is what you have to sell the business for to get to that lifestyle. So now that you're in control and you have your business set up where the value's more, you have a better chance of reaching that goal to keep that lifestyle funded. Um, not all type.
I think control is something that, is important that we keep touching on because it's a blessing and a curse, right? The control is usually why the business has been successful because the owner is taking the pride in it. They're salt of the earth in their own way in the sense of they're not too good for any job, right? So like you said, the janitor all the way up to the CEO, it's like their baby. They raised it, they changed the diapers, they did everything to it. And they may not like all of it, but they've kind of accepted the fact that that's part of the deal. And then you get to a place where you forget that you still don't have to do those things. It's at least now at a point where you don't have to do those things, but you're in the habit of doing those things. And other people are in the habit of letting you do it because you've had that argument too many times for whatever reason, right? But it always comes down to some loss or sense of control. The flip side of that is, okay, so you sell this for the ultimate number, whatever like you just take your ultimate number. Somebody wants to give you that plus 20%. Great. So now you have a lump sum of cash. Assume you can find your meaning somewhere else. Assume that doesn't dissipate at all. Probably not likely, but assume that you wake up every day and you feel amazing and you're having fun again because you got rid of all the headaches. But now you got X million dollars plus 20 points higher because somebody really wanted your business. That's now parked in some asset class or mix of diversified asset class with someone else managing it, delivering you return. And you've now given up all control and certainty over that and hope that S&P keeps going and that bonds keep paying what they pay. And that's okay, but that's an uncertainty that a business owner type usually is not prepared for. Because when they had pain, they could look in the mirror and they could realize it was their fault or it was something they could fix. And there was this sense of control around what to do next. when something happens in the financial markets and all of their income that is there is potentially threatened and they don't have a sense of how the plumbing works and why it works and what's going to happen next. And that's a different level of stress because it's not better or worse. It's just something that you have to think about. So if you can somehow find the joy again by professionalizing your business and not have the binary choice of I have to leave it tomorrow, sell it, and then park my money somewhere else, then you might find out that that's the Goldilocks, right? That's the perfect solution. But nonetheless, the exercise is important because at some point we're going to die. At some point we're going to get incapacitated, and it's usually not going to be when we want.
Nope, never is.
So this is why we do these AMAs. Keep the questions coming. If you want to get in touch with Matt and you are in Colorado, you can do that at 970-820-0090. If you are in all 50 states and you want to call the Wyoming office, talk about asset protection, entity structures, things like that, exit planning, then that number is 307-463-3600. And you can have a human answer the phone, actually, not an auto bot, and the human will call you back. If you call during business hours, they will answer the phone. If you don't, you can leave a message and someone will call you back at the number of your choosing. And so if you have some questions, you want to do a one-on-one or something like that, you can do that and have a pre-consult and get some more personal time. Matt's available for that. Otherwise, he's here every Wednesday with me, unless something crazy happens, in which case Owen or someone else joins, and we do our best to keep the conversation going. So thanks, Matt, for being here for another AMA with Matt Chats, and thanks all of you for tuning in.
Thanks, Chris. It's been fun.